Hello everyone, this is Jim from Data Finance. Welcome back to our channel. We are with you on 30th of March afternoon analysis. On this video, we will cover three basic charts. Alright, before starting the video, we will share the news first. German inflation has reached to 7.3 more than expected. Expected was 3.6, and this is the highest in last 40 years. And we will see the outcomes of this increase in the next months. All right, another one is the ADP report. ADP report is positive, and labor market in US is recovering much and more, much and much each passing day. All right, let's start with our first chart. As you can see here, dollar index is on decline, with global risk or just kind of with the statements is declining. It's the just making some correction, but the level is critical. Why it's critical? Let me just show you. As you can see here, this level has worked as a support level for previous day on 10th of March, on 17th of March, and each one just made another rise in the rally. If that just works as well in this one, we will see another rise in dollar index, and it will affect your dollar, GBP USD, and some other currency pairs as well. So this is just kind of retest of these low levels, but in the coming days I'm expecting high and bullish dollar index. Let's look at our second chart.
You are ready to win with us. GAN Market.
All right, our second chart is, as you can see, gold, and gold is rising. Why it's rising? Why it just declined so much yesterday, and why it's rising right now? Yesterday was the first day of Russia-Ukraine talks in Turkey, and both sides were positive. And then we have seen some withdrawals from Kiev region of Ukraine. Russian troops just withdraw some of them, but then the missile attacks didn't just stop. And today, Russian side said Crimea and Donbass status and our attitude against those regions haven't changed. So what Zelensky is telling us from the start of the first day, since the first day of this invasion, he is telling that Crimea and Donbass region is not Russian territory, it's Ukraine territory, and then we won't discuss any single piece of the land. So when we just think about these things, when the investors assess these kind of things, they have seen that, or there is no change in peace talks. That's why the risks are growing. Just let's go back to safe havens. They are buying the gold again from these low levels. It may just test 1949 level if this kind of risk just go like this. And also inflation in Europe, also another factor. People are just rushing to buy gold to hedge themselves inflation, global inflation. That's also another expectation. If dollar index rebound, and then if you just like you see some growth in US 10-year bonds, 2-year bonds, then we can just see some more pressure on gold. But these days it's not possible because those high level of US 10-year bonds and 2-year bonds also risky for future of US. They don't want to pay those interest on that one because they have a lot of debt. Just imagine like many of the debt of US is 2-year bonds. They have just taken the first month of bonds of this pandemic. It was 0.25 of the rate. So right now in March they are just paying those debt, trillion of debt with new bonds. They are right now paying 2% more, and that costs a lot of money. Just when you just think about that, then they just don't want to pay that much debt. All right, let's go ahead our last chart. All right, oil prices is rising again. Just like gold, people have sold the oil the same reason. They just thought that any outcome, any good outcome can be just seen in these talks, but investors are just like lose their faith in these talks, and they don't expect something positive from these talks. And we are also getting closer to end of March. And special thing is natural gas will be like Russia is expecting ruble payments for natural gas, and also they have added that oil, wheat, and some other minerals exported from Russia can be sold by ruble. So we are discussing these kind of things. So it's making risk higher, and when the risk is higher, when the output is low, then we see a rise in oil prices. Another thing is ADP private sector data. So you will say why people are just going back to work. That means in US they will just use more cars, and then there will be more demand. And when they have job, they will spend more time, especially in spring and summertime. They will just travel further. This will just keep oil demand to higher levels. When that happens, we will see shortage of in the international markets on oil. When that happens, price goes up. That's the expectations. All right, thank you so much for watching us. We will be together on more news, and we will just cover more charts with you. Have a nice and profitable day. Bye.